Welcome to our comprehensive guide on real estate loan financing costs. Today we'll cover everything you need to know to pass your real estate exam, including interest, loan-to-value ratios, fees, amortization, discount points, and prepayment penalties. Let's get started with some real-world examples. Let's start with interest rates. Interest is the cost of borrowing money, expressed as a percentage of the loan amount. For example, on a $300,000 home loan with a 6% annual interest rate, you would pay $18,000 in interest for the first year if this were simple interest. However, most mortgages use monthly compounding, which means the actual amount will be slightly different. Next, let's discuss loan-to-value ratio, or LTV. LTV is the ratio of the loan amount to the appraised value of the property, expressed as a percentage. For instance, if you're buying a $400,000 home and making a 20% down payment of $80,000, your loan amount would be $320,000. This gives you an LTV of 80%. Most conventional loans require an LTV of 80% or less to avoid private mortgage insurance. Now, let's explore common loan fees. These typically include origination fees, appraisal fees, credit report fees, and title insurance. Let's look at a typical example. On a $300,000 loan, you might pay a 1% origination fee of $3,000, an appraisal fee of $500, a credit report fee of $50, and title insurance of $1,000. These fees total $4,550 in closing costs. Let's understand amortization. Amortization is the gradual repayment of a loan through regular monthly payments of both principal and interest. For example, on a $300,000 30-year fixed mortgage at 6% interest, your monthly payment would be about $1,799. In your first payment, about $1,500 goes to interest and $299 to principal. As time goes on, more of each payment goes toward principal and less toward interest. Next, let's examine discount points. Discount points are fees paid directly to the lender at closing in exchange for a reduced interest rate. 1 point costs 1% of your loan amount. For example, on a $300,000 loan, 1 point would cost $3,000. Each point typically lowers your interest rate by 0.25%. So paying 1 point might reduce your rate from 6% to 5.75%, potentially saving you money over the life of the loan. Finally, let's discuss prepayment penalties. These are fees charged by some lenders if you pay off your mortgage early or make extra payments above a specified amount. For example, a prepayment penalty might be 2% of the loan balance if paid off in the first year, 1% in the second year, and 0 thereafter. On a $300,000 loan, paying it off in the first year would incur a $6,000 penalty. Understanding these loan financing costs is crucial for passing your real estate exam and for your future career in real estate. Remember to consider all these factors when helping clients evaluate their financing options.